Hey everyone, welcome. I'm Stephen Kalajian, and welcome to Back to the Futures. I host the show each and every Thursday, Tuesday and Thursday from 1:30 to 2. It's such a great honor to be here. 41 years in the industry, and now it's my turn to give back and teach you. I've taught some of the best hedge fund, worked and taught some of the best hedge fund managers in the country, my technique, my methodologies, and let's just get right to it. So today we saw the S&P's futures push up to the 55 level. And I told you last time that it's really important the way I look at the market. I look at multiple time frames. Coming into the day, I was bearish on the 30 and 60-minute time frames on all the four ETFs, the spiders, the SPY, the QQQs, the IWMs, and the diamonds, the DIA, right? So all four of the big ETFs that make up the market, the Dow 30, the S&P 500, the Nasdaq 100, and the Russell 2000, all four ETFs were negative on the 30 and 60-minute time frames. And then right after the ISM number came out, we got a push up, and the 15-minute time frames reversed to buy on the underlying ETF. So that caused now what we have is called a disconnect, right? So the disconnect, meaning of the three time frames, the 15 to 30 and the 60-minute time frame, one of the three reversed to buy. And so when you went from a correlation or a trend on the 15, 30, and 60 that were in sell mode, once that 15-minute time frame reversed to buy, you then went into a disconnect. When we got that big overbought condition off the 15-minute time frames around the 10:30, I immediately looked at my 30 and 60-minute time frames, still very bearish, still nowhere near in like it's going to get a buy reversal on the 30-minute time frames, and they got absolutely kabooshed. Kabooshed meaning they got absolutely slaughtered. They dropped. S&Ps dropped from 55 all the way down to the 54, I think 94 and a quarter. They dropped roughly 60 handles. Boom, straight down. And then when we had that drop, guess what? We got sell reversals on the 15-minute time frame SPY. And here it is right here. The 15-minute reverse to sell right here using my algorithm. And that gave me now the condition that, number one, the highs are in for the day. Boom, the 15-minute time frame reversed. And two, the 15-minute correlated not only with the futures contract on the 15, it also correlated with its 30, and it also correlated with its 60. So now we're in a negative trend on the 15, the 30, and the 60-minute time frame. You know, today's title is, I want to show people, after I show you these patterns, how important it is to use the Pro Ultra shorts, like the SDSs and the SQQQs in trading the futures markets. So during the US session, my charts are the 3-minute time frame on the S&P, the 5 and the 15-minute time frame on the S&P, the spiders on the 5 and the 15, the SDSs on the 5 and the 15, and then I go right here. I look at the 30 and 60-minute time frame on the spiders and the underlying S&P futures on the 30 and 60-minute time frame. So 1, 2, 3, 4, 5, 6 charts, because it's a powerful index. And whether you're trading NASDAQ, 30-year bonds, oil, gold, it doesn't make a difference. Russell, RTYs, YMs, or NASDAQ futures, this to me is the right setup to have, especially if this is what you're going to do each and every day, to be able to look at the market in such a way that gives you the best bang for the buck, right? To be able to give you, the ability to see the market and be able to trade, right? So now the 15-minute time frame reversed to sell. So the sequence goes like this: 3-minute, then 5-minute, and then 15-minute time frame. So right here, after the 15-minute time frame reversed to sell on the spiders, And again, whether you're trading the underlying ETF or trading the futures markets, and that's what we're here to teach you, to be able to look at the underlying ETFs. If you look here, you can see right here, okay, this is the bounce on the 3-minute right here. And then this is a bounce right here off the let me see right here. This is the bounce on the 3-minute. Here's another about 3 to 5 minute. And then here is the real bounce on the 5-minute. And then here's the bounce on the 15-minute. So the 15-minute time frame. So this basically, this pattern right here is the first bounce on the 15-minute time frame into the negative MACD. Negative MACD meaning the indicator, the MACD is blue over yellow. The 15-minute time frames in sell mode, it correlated with the 30 and 60-minute time frames on its time frames on the spiders. And then we were calling, I said I'd be looking to short 09.5 up to 16.5. I believe they got up to 11.5, 12, and they dropped roughly about 13, 14 points on the S&P futures. Now, the positive MACDs right here are giving it some credence to hold. That's why you saw the little bounce here, okay, from 98.5. But this pattern right here, the 15 getting overbought into the negative MACD was very, very, very powerful. Very powerful. So when you're able to see this, you're able to understand the significance in trading the market based upon the divergences. That was a sell divergence in a negative trend on the 15. Now, I want to show you the underlying bigger time frames on the SDSs here. Now, you see the SDSs here, okay? Let me just show this to you right here. Okay, the SDSs, I got the buy reversal right here. Okay, I got the buy reversal right here on the 15-minute time frame. And then you wait, this is the pullback right here on the 3-minute. Here's the pullback on the 3 and the 5. Here's the pullback on the 15-minute time frame. And you can see the oversold condition into the positive MACD. So basically, this gave me even more confirmation to be long, to be short the S&Ps. And not that I'm trading the SDSs, but you're able to look at the underlying ETFs. Now, when you see these negative MACDs like this right here, okay, and you see the positive MACDs on the S&Ps and on the spiders, so you're pushing down into those positive MACDs, and you saw just now the S&Ps just ricocheted up almost 14, 13, 14 handles. You have to be cognizant of the fact that if you can master the art of divergences, you've mastered the art of trading. And this here is a key point in trading, to be able to identify and trade the right patterns, right? To be able to see, well, okay, the spiders just correlated to sell. They just correlated to sell on the 15-minute time frame with the S&P futures. But wow, the spiders just correlated to sell with the 30 and 60-minute time frame. So I'm going to look to short the first overbought condition using indicator 3 on the 3-minute. Then I'm going to look to take another short on the 5, and then the next short on the 15. So the S&Ps in 1, 2, 3, 4, 5, 6, 7, 8 bars dropped from 11 down to 95.5, 96.5 range, somewhere in there. So when I look at my strategies, my research has shown me that on any given day, using the continuous contracts, you'll get anywhere between 12 and 18 great patterns a day using this combination methodology. Also, if you're looking at the markets, you can trade this during the Tokyo session without looking at the underlying ETFs, and if you can also do the European session. But my research has shown me that, and again, I've taught this as some top hedge fund managers, that you really need to be looking at the underlying ETFs, the Pro Ultra Short, SDSs, the spiders on the same time frames during the US session. Because when they correlate, like I just showed you here on the spiders, and the SDSs got the buy reversal, now you want to swim with the tide versus against the tide, okay? So it's really important to understand using multiple time frames how important it really truly is to be able to identify these situations, right? So on the S&Ps, when they made the push down just now, before we came on, I said I'd be looking to cover shorts here. And okay, and of course now they just ran about 13, 14 points upward. And the NASDAQ from that point on also got a very, very big push down. And the push down was something of a magnitude of about 60 points on the NASDAQ futures. So what we're looking at now, all right, what we're looking at now is to see whether or not we're going to get a push back down, all right, in the markets based upon the 15-minute time frames. Again, pushing back up here. My guess is I think the lows are in for the day. So there's a big number, big number today. The S&P's 54.88. The low is 54.90. If we get a close below 54.88 on the S&Ps, I will get a sell reversal on indicator 4, my algo, and to a sell signal. And we were 2 points, 2 handles away from that. Now, when we got that push down today at 54.90, there was a really great buy divergence off the 3-minute time frame, and they just ricocheted right back up 15 points on the S&P. You can see, I'm telling you, sometimes I think that like they know my numbers, because how is it that the S&P's bounced off that 54.90 and they know my sell reversal price is 54.88 based upon my work. But that's another conversation on that. Okay, what's important to understand. Okay, what's important to understand is taking this technology and being able to apply it where you can now become consistent, right? To be able to understand that you have a mentor, you have technology, and now you have the proper resources to trade the market, okay? And that is really key, and that is really what it's all about. To be able to be consistent each and every day, to have the confidence, right, through a mentor like myself, and or having them both, and having the technology so you can identify the patterns, okay? So again, it's really important by looking at the pro ultra shorts, the SQQQs, the SDSs, to create the ability to verify and confirm what you're seeing. So when the S&Ps or the spiders were trading at about, what was that, 1 o'clock, 1:05 to the 11 and a half range, I didn't even flinch. The SDSs were deeply oversold, okay, after the 15 reversed to buy, boom, right here. And now the spiders got overbought. Beautiful bear flag on the 15. Let me just show you here on the spiders. Right here. Here it is. This is the pattern right here. Right here, right below the 10-bar weighted moving average. You got overbought into the negative MACD. Okay. So when you get this push up here, you can see this is what it's about. So now looking at my indicator, 550.58, I'm about 12 handles. So the S&Ps would need to go above 55.25 just to get a buy reversal on the 15-minute time frame. All right. So now we're pushing up here, and if you look here on the S&P futures, right here on the 5-minute, we got this push down right here. You can see this is the push down on, oh, that's a 30-minute. Let me see the 5 and the 15. Oh, here we go. So we got the push down all the way down here on the S&Ps to the 54.97, I believe. So they dropped about 14 points here. Okay, now we're pushing right back up. Right. So now if we get this buy reversal here, let me show you this pattern right here on the spiders. So if the 5-minute time frame reverses to buy right here on the S&Ps, then I would look for a pullback. This is, here we go. The spiders just reversed to buy. All right. I would take a short here, 17 and a half to 24 and a half. I'd be looking for shorts in this range here. NASDAQ futures 83 up to 03, 0310. I'll be looking for shorts. And now I'll be looking for a pullback here based upon this pattern and then I would be looking to go long based upon this pattern here. This is called a strategy I call a triple Lindy that gives me the ability. Now, this is a buy divergence in a negative trend. This is a buy divergence in a negative trend, and the STSs have a complete inverse pattern. So the next bounce on the STSs would be the short. The next pullback on the S&P or spiders, I would be looking for longs here. Again, you're trying to just be consistent. You don't have to take the short. The safer play is to probably take the long on this type of pattern as we're seeing it unfold right before our eyes. Same thing with the Qs, all right? The NASDAQ futures, they're getting buy reversals here on these particular time frames. So again, what's important to understand is the S&Ps just ran 20 points just now off the buy divergences. The MACDs are crossing positive from below my pivot line here. So when we got this push down, you can see that the MACDs were not pushing down in any capacity to any significant push down, okay? Now what we're looking to do is we're going to look to cover any shorts, and then we're going to look to go long on any pullback. That long should be a pullback off the 3-minute and or the 5-minute time frame, all right? It's important to understand what I spent my years of developing this to be able to identify these trades, to be able to identify market direction, to see the markets in a way that will give me the best opportunities for me to trade the market here. So right now on this type of pattern, I'd be fading shorts, and then I'll be looking for pullbacks here. All right. So if you look here, now that the 15-minute time frame, the 5-minute time frame reversed the buy, all right, I would be waiting for a pullback to cover any shorts, and or if you don't want to short it, look for a pullback to get long here. S&Ps just rallied 25 off the lows. They rally almost 30 points off the lows here, off the lows. It is important, imperative to really understand how these patterns repeat themselves over and over and over again. If you're short S&Ps, I'd be looking to cover anywhere between the 18.5 and 22.5 range now. And I want to see a deeper pullback. Right now, we're 15 points away from the 10-bar weighted moving average on a 5-minute time frame. So right now, the NASDAQ futures, I need them to drop. We're 60 points above the weighted moving average. Again, with the algorithms and everything that I'm seeing here, okay, the push down earlier on the at the 11:30 time period, we made new lows, but the MACDs did not confirm on the 30-minute time frame. Okay, S&Ps are dropping here now. So again, I'd like to see a nice pullback just on the 3-minute time frame. We're over 13 handles away from the 10-bar weighted moving average. So this pattern should be a great pattern. The MACDs are positive on both the 3 and the 5. So I want to be able to get some type of a nice pullback here to enter longs here. All right. It's really important to understand how these patterns repeat themselves, to be able to pick up divergences. I would never have been able to call that long earlier if I didn't have the 30-minute time frames up. And I'm saying to myself, wow, they're making new lows here, and I'll show it to you on the spiders. Well, let me look at the Qs. I really saw it on the Qs here. If I type in the QQQs here, which is obviously you can look at the NASDAQ here. If I change the time frame here, right here to the 30-minute, you can see here when we were making new lows right here, the MACDs, I just draw my horizontal line right there. The MACDs did not confirm. One bar over, sorry. One bar over, right here, right there. When we were making new lows, I turned around immediately and I saw that they were not making new lows on the 30-minute spiders and on the 30-minute QQQs. So that was really important, okay? That was really important, and I was able to pick that up. And that's really how technical analysis really helps you with these non-confirmations. So now I'm getting buy reversals on the 5-minute time frames on the Russell, IWMs, the QQQs, and the spiders and the diamonds, right? So now the right pattern for this trade would be to buy a pullback, wait for some oversold condition on the 3 and or the 5-minute time frame, look to take a long, and I think that would be a great setup here. We're still 12, 13 handles away on both the 3-minute and the 5-minute time frame from its 10 bar weighted moving average. So I like to see a pullback, hopefully between the 12 and, I don't know if we're going to get 12 and a half, but maybe anywhere between the 13 and a half and 16 and a half range for a pullback. The 10 bar weighted moving average comes in at 08, 09, 08 and a half, 09. I don't know if we're going to get that deep. It could. I don't think it will, but I like to see it pull in at least to the 13 and a half, 14 and a half, 15 and a half range for a pullback, where I think with this pattern should set up a nice long for a push up. Okay. Again, this is technical analysis. This is how I look at the market. This is how you're able to read the market based upon using the multiple indicators. Last week, I talked about how indicators lag, how price leads and indicators lag. That is so true. However, once the price leads and the indicators lag, the indicators now set the tone for the pattern. I hope everybody understands that, okay? All right? How the indicators set up the pattern. And that pattern will give me the ability to trade the market the right way, okay? All right. Does anybody have any questions at all? All right. Trading futures to me is the greatest asset out there. I've had people from all around the world talk to me and say to me, hey, Steve, I'm trading stocks. I want to learn how to trade futures. Hey, Steve, I'm trading options. I want to learn how to trade futures. I'm just a beginner and I want to learn how to trade futures. Whatever the combo is, it doesn't make a difference. Then I have people who say to me all the time, hey, Steve, it's really important that, I really want to trade futures, but I'm scared to trade futures. I'm like, well, why are you scared to trade futures? I'm like, well, it's new to me and I hear it's crazy. Well, if you're trading period, it's absolutely crazy, number one. And number two, you got to know what you're doing. And number three, if I told you, let's trade water, is that going to be any different? Is that going to calm your nerves even more? It shouldn't make a difference, okay? It's just a different way of executing using a ladder, a matrix platform, okay? Tradier's got a great front-end platform. You can go click, put your orders in. You could trade paper trade. From paper trading, you can then go to micros. From micros, you can go to the big contracts. So let's say, for example, you bought 3 micros and you made it's 3 points. Well, you made $45 on that one trade on if you made 3 points on the S&P, less commissions, maybe you made $38 roughly. I'm just plus or minus. I'm just giving an example. If you bought 3 S&P big contracts, it's $50 a contract. And let's just say you bought them and you made 3 points on those. Well, you made $150 times 3. You made $450 on the 3 big ones. Tradier's got great margin for micros and for the big S&P contracts. So to me, it's really a win-win all around. Great company, great futures platform, great front end, and great margin rates. This is really super important when you're trading the markets. With 7 minutes to go, does anybody have any questions at all? Okay, so now I'm just looking for a pullback here. Hopefully that we get this pullback. We're still about 12 points from the 10 bar weighted moving average. Okay, you see how important this 54.88 number is. They sniffed it right out on me, and we got down to 54.90 on the S&Ps. It's important to understand the relevance using these MACDs and see how powerful they are. Okay, you can see the MACDs positive here. I'll even bring it up a little more clear here on the spiders here. You can see here, and I'll just change the time frame back to the 5-minute here. And you can see this is the pattern on the 30-minute. Okay, let me just type in the spiders here. And let's just change this time frame to the 5-minute, and then I'll type it here to the 15. Okay. Okay, so if you're looking here right now, you see the push up. So right now, here's a 10 bar weighted moving average. I am right now about 11 points from that weighted moving average. I like to see them pull in a little more. I want to see the 3-minute time frame. Maybe the number comes in 16 and a half, 15 and a half to 17 and a half. Let's see if they pull in, where I would then be looking for longs on this. All right. All right. What else? So again, it's important for when you're trading the futures markets to be looking at the underlying ETFs, the spiders and the STSs. And so the title, again, like I said earlier, is to be able to use the underlying pro ultra shorts, the SQQQs, the STSs, the TZAs, and the SDAOs. Very important when you're trading the futures markets, especially during the U.S. session, obviously during the U.S. session, right? Also, it's important that when I look at the market from 9:30 to 4, I set my charts on the underlying ETFs and stocks to what's called RTH, real-time hours, because the continuous contract on the S&P futures trade 23 hours in a day, and the underlying ETFs trade 6.5 hours in a day. So that's very, very important. Okay, very important. Like I said, I've taught this to some top hedge fund managers in the country, some of the best traders in the country, if not the world, and they were blown away. And one of my guys said, "How do you figure this out?" Well, it just took a lot of research, and I started seeing things, and in my development of building my application here, to be able to hit your goals every single day. If you can make 5 handles a day, 10 handles a day, if you could trade the market, and as long as you take money out of the market, no worse feeling in the world is being up money and then giving it back at the end of the day. You want to be green every single day. You want to be able to acknowledge the markets in a way that you're able to trade the right pattern and see what happens. I don't know what caused this 25 handle rally out of nowhere. Something must have just come out. Okay. But right now, for me, I think the lows are in for the day. I think the highs are in for the day. I'm just looking to buy a pullback here to get long for the next move up. I hope we get this pullback. I don't think we're going to get this pullback in the next 3 minutes. Maybe so. But if we do, I would be a buyer between the probably the 09 and 15, 16 range on the S&Ps. We're still six points away from even not coming into that zone. Gold's starting to push up here. Gold's been a beast all day. Was up, near the 50 level. Great patterns here on gold. I'm about to get a buy reversal on the 15-minute time frame on gold, and then if you have enough time, maybe you get a pullback on the 5-minute. Oil's been in a steep decline. Again, when you're looking at oil, I look at the USOs. I have nothing but sells on the 15, 30, and the hourly charts. And guess what? No. Oil is not going up here. Oil is telling us right now, it looks like oil is telling us we're going into a recession based upon the decline from, I think oil hit 80 about a week ago or so. So again, when you're looking at the markets, please look at the 5 time frames on the continuous contracts, the 3-minute, the 5-minute, the 15, the 30, and the hourly. And when we're looking at the underlying ETFs, I look at the 5, 15, 30, and hourly charts. Okay, we have 2 minutes to go. If there's any questions, please feel free to ask away. If not, I'm just going to keep going. Got like another minute to go here. Again, each and every Tuesday and Thursday from 1:30 to 2, I'm here at Back to the Futures. It's a great segment on Tradier Hub. And again, if anybody has any questions, please feel free to reach out to me at 914-500-7484. Gold's pushing up here. You're going to get this buy reversal on gold. It's going to be a nice pattern here on gold, where I'll be looking for pullbacks. 30-year bonds, beautiful patterns all day. 11:30, I got the buy reversal. And then the 12:30, I got the buy reversals on the TLTs. Nothing but great longs here on the market. S&P's now only down 4. NASDAQ's up 47. And if we get these buy reversals here on the spiders right here, okay, I would be looking to buy the first pullback on the 5-minute time frame. Should be a great long. And we got it right here at 2 o'clock. Boom. All right, everybody. Have a great day. Have a great weekend. Oh, my phone. Have a great weekend. Enjoy. If anybody has any questions, please text me or call me at 914-500-7484. I would be looking for the next pullback to get long here on the S&P and NASDAQ futures. Have a great day, everybody.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.